Hi, I'm Mike Maloney, and I'm here with my good friend Dave Morgan of themorganreport.com. And he is one of the top experts in silver in the world. A lot of what I learned came from David many years ago. We've known each other for more than a decade now, and he actually provided some of the information that ended up in my book. Dave, how are you doing?
I'm doing well, Mike, and thanks for inviting me.
Good. You know, with all of the geopolitical turmoil, the potential of even war right now with North Korea, and if that happens, China would get into the mix. We're in Syria, and Russia is, in the mix there. I haven't seen such geopolitical instability since the Bay of Pigs with Kennedy. I mean, you and I are both a product of the Cold War. We're part of the baby boom generation. And we're just at a very, very uncertain time in the world. And at the same time, the markets have gone insane. By any measure, they are in extreme bubbles, and they keep on going up. And what we're seeing out there, the U.S. Mint is down about 60% year over year in Silver Eagle sales. It's just crazy. People are getting out of precious metals and jumping into the market. They're doing something with that currency. When they cash out of metals, they're putting that currency somewhere. And I think it's going into the markets, and they're chasing a bubble right at the very peak. And it really saddens me because I think they're going to get slaughtered. Have you got any comments on that and all of the geopolitical risk right now?
Well, on the geopolitical risk, I commented it was recently to a rather formidable group, and I said, actually asked the question, I said, if we're on the precipice of World War III, or at least the mainstream press and alternative media both are looking at a possibility and a distinct one of triggering World War III, and that cannot move the gold market, or especially the silver market, then what can? So to feed back and add on to what you said, Mike, if this fundamental situation is not getting new buyers into the market, we have to conclude something, and I will. I think the market is saturated. I think that the saturation is at two levels. The first is in the physical level, which means that all the stackers that have listened to you and I and many others like us have probably bought all that they can or wish to. And many probably overloaded. Maybe they're all in, like you and I. I'm pretty much all in. I have other investments besides resource stocks, physical metal. But anyway, moving on. So, and they're also saturated on the idea of the safe haven. And, what if this happens? What if that black swan manifests and that type of thing? So I think it's a saturation both on a psychological basis and a physical amount of metal basis. So the only thing that's really going to move this market, in my view, is more buying. We all know that. And I think primarily not from the stacker community, but primarily from the institutional side, because the institutions basically left the precious metals markets long ago after the 2011 peak in silver and the September peak in gold. They hung in there for a while, but unless you really are a contrarian, most of the precious metals hedge funds and private equity funds, family offices, pension funds et al. Have basically left the precious metals markets.
Yeah, I have seen an uptick, though, in some very large investors wanting consultation. They are starting to feel pretty nervous right now. But what I do see is it's such a shame that the small investor, like I said, there's something driving the markets, and we do see a lot more sales than people buying right now. So it's interesting that the West is dishoarding and the East is accumulating. When those months where China, Russia, India exceed worldwide production, that excess has to come from somewhere, and it's coming from us selling. And they're the buyers. And I think when all this geopolitical dust settles, that we're going to be a lot poorer and they're going to be a lot richer. This is, however,
if I could I could jump in there, Mike, just for a moment, because
yeah,
you just basically wrote the closing thoughts of my report that will be published in the next couple of days. And it goes back to when you and I and Grant Williams were up in San Francisco. And Grant just did a piece after his Nobody Cares piece. I forget the name of it. I want to give him credit. But basically talks about what you just said. All the money in physical metal is moving in, the fiat the currency is moving into physical metal in Russia, China, and India. And I wrote about that and also gave Grant credit for this work that he's done. And when, I don't think it's an if, it's when the new reset takes place and you have the main productive capacity, which is primarily China, and you have the necessary energy required, which is primarily Russia, and you have gold to back it, and you start pricing gold in yuan, for example, and you start a futures market in yuan, this is Grant's work now, then you're really going to have a dynamic shift in people that left the market because they were burnt out. My catchphrase, I'm digressing a bit here, Mike, but the silver market and the gold market, especially silver, will wear you out or scare you out. Well, it's worn out just about everybody, either any way you want to look at it. But it hasn't worn out the Chinese, the Russians, the Indians, the BRICS, because they have a much longer term perspective and they are much more acquainted with monetary history than most in North America.
Yeah, here we do have a mentality of we want to get rich today. We don't want to wait. And, this is the capitulation, though, that I was looking for. 2 years ago at the Silver Summit, when everybody was saying the bottom is in, I was saying I think it's still going to go down again. And this is what it requires for a really healthy third phase of this bull market to start. And it also will catapult gold and silver far, far higher, I believe, this capitulation that we're in right now. And, I was just on an interview with Greg Hunter, and he was asking, if something really bad does happen, if North Korea does launch a nuke that goes off somewhere, what will happen to the price of gold and silver, and how long will it take for all of the supply of real physical to run out? What's your take on that?
Well, I'm going to sound cynical. First, the answer is I do not know. I would love to believe it would take off, go up, limit, and you'd run out of supply. That's not what I think right now. And today's
run out of supply in hours, not days. And that it would become unaffordium and unobtainium, and they would gap up huge, just like instantly.
I'm nodding my head. I don't know, but certainly there would be a rush. And the real problem lies, Mike, as we've talked about and written about for years, is there are a lot of wealthy people, institutions, et cetera, that hold a certificate from a well-established, well-trusted counterparty that really doesn't have what they promise. And they trust this entity because everything else has been trustworthy up until that day. They say, you know what, I'm sending you this certificate or this warehouse receipt. I actually want to store it in my own basement or my own workplace or my own safe or whatever. And sorry, Charlie, you're too late. We had to file bankruptcy. And that's a heartbreaker.
Wasn't it Morgan Stanley that lost a suit because they told people that they had physical silver in storage? They were charging them storage fees, and all they had was futures contracts.
Precisely.
Yeah, no silver.
No silver.
So I used to say, if you can't hold it, you don't own it. But a good a storage account in a third-party facility like Brink's with a certificate from the third party, not from your dealer, that's fully insured by Lloyd's of London and such. I do trust that as far as physical. I don't have to have it all at my house.
Now, I store some too. I mean, I want to be clear on that.
Okay.
But you got to be very careful. And let's just drill down on that a bit more, if you don't mind, because
sure.
I've seen people that have thousands of dollars into the metals, physical, paid for, and then they're kind of squabbling about, am I going to pay this much on an annual storage fee or this much. We're talking about a quarter point or a half a point. And boy, that is something you do not want to save money on. You want to be as safe as humanly possible. And say, in the worst case, let's say something does happen, at least Lloyd's of London is backing you up and at least get the paper price at the time or whatever. So I just want to emphasize that. And I'm going to drill down even further. But, there's often, when I wrote the 10 rules of silver investing, Mike, as you remember, and I think it's rule 4, but I remember the rules, don't get a raw deal from your dealer. Getting the best price is not always the best deal, because sometimes, in my experience, and this has happened throughout my 40 years, that shopping price alone may get you a great price, but you may not get the product. And right. Of course, we saw that with Tulving. We've seen it with several, Northwest Territorial Mint. I mean, on and on it goes. That price alone, and it's the same thing here when you're storing, you really want to, the old adage, you get what you pay for, is usually true. Not always, but primarily it's a common sense thing. If you're getting too good a deal, then it probably is. Yeah.
You have to allow for your dealer to be able to have all of the proper insurances and to run their business with all the checks and balances in place. I mean, somebody should shop. You don't want to go to a dealer that is way overpriced. But when you try and squeeze out that last 0.25%, you could be screwing yourself. So the death of the global U.S. dollar standard. I've been giving presentations on this for years, and it's like every couple of weeks you see another nail in the coffin, but it hasn't fallen apart yet for some reason. What do you think?